Hi, welcome to the ticket. Stock markets are like a roller coaster, a ride of fun and fear. Stock markets play an important role in a country's economy and growth. But what if the same company that is responsible for the growth of a country is now living in the fear of crashing the markets across the globe? Today, we are going to talk about the Evergrande. In this episode, let's talk about how Evergrande, the second largest real estate giant in China, collapsed and why its collapse is being compared with the Lehmann Brothers times. Evergrande is one of the biggest estate developers in China and has vastly grown due to a spectacular real estate boom thanks to China's unprecedented growth. The company was founded by Xu Jian, who was listed Asian as the richest man in 2017. And what makes the company big are the 1,300 projects that the company owns in over 280 cities across China, which amount to more than 2 lakh employees and through its project generates over 38 million jobs each year. Evergrande has not limited itself to the real estate business. Instead, they have diversified the business lines across different sectors such as electric vehicles, theme parks, grocery and beverage businesses, etc. Not only this, but Evergrande also owns Guangzhou Soccer Club that it took control of in 2010 and spent billions of dollars on foreign players. Now, after all this, you must be wondering Evergrande is such a big company, but this diversification unfortunately has led to their own downfall. Evergrande's interest bearing debt stood at 571.8 billion yuan, which is equal to 89 billion US dollars. Not only this, the company is on the edge of becoming bankrupt since its total liability is 1.97 trillion yuan, which is equal to 2% of China's GDP. Now, this mess seems way bigger than the company itself. But now the question arises where? From where all this started and how the company ended up bearing such a huge debt. And ultimately, why is the collapse of Evergrande Company being compared to history's biggest bankruptcy of Lehman Brothers? The Evergrande Group was founded in 1996 and it sells apartments mostly to upper and middle income dwellers. By the start of 2000, the Chinese banks started giving loans without much restrictions, which somewhat strengthened the selling strategy of Evergrande Group, that is to sell the apartments before they were completed. By 2009, the business was enjoying the boom period in the market. Mr. Xu was able to attract tens of billions of dollars in funding from foreign and domestic investors and cheap loans from Chinese banks. His political connections and China's unprecedented growth gave investors and banks the confidence they need to keep lending the company. By 2019, Mr. Xu was one of the richest property developers in the world. But that was a story before an interval. Fearing a housing bust that would ricochet through China's financial system, the central bank in August 2020 introduced three red lines, rules forcing property companies to get their debt levels down before they could borrow more money. And here started the company's struggle for funds. Under three red line rules, Evergrande's luxury to expand its business without worrying about capital ceased as it failed the test in 2021. Now, to make the constant flow of funds, they started borrowing money from the public via Evergrande's wealth program. Evergrande was listed as a Fortune 500 company and were promising return up to 7 to 8%, more than the bank rate, hence they raised good capital from public investment. Right now, there are 1.4 million houses that are incomplete and not only domestic suppliers' capital has been invested, but also the chain continues to the foreign and domestic public players. On one hand, where China's second estate developer is struggling to sell his projects, on the other, they are also sinking under a mountain of liabilities totaling more than 300 billion US dollars. Could be, but since Lehman Brothers was a US based bank whose economy dominates the entire market, therefore their bankruptcy led to a hole of entire money supply, affecting other nations too. Whereas Evergrande is a real estate business whose impact could end affecting the Chinese government as their 20% GDP depends upon the real estate and also the international steel and other suppliers required in the sector. The world will not face the same financial crisis as of 2008, but there will be some disruption in the market. Evergrande's failure has shown the ineffective financial system of the Chinese government to the world. If the government saves Evergrande, they risk sending a message that some companies are still too big to fail. If they don't, as many as 1.6 million home buyers waiting for unfinished apartments and hundreds of small businesses, creditors, and banks may lose their money. Although the Chinese government has taken steps back for reviving Evergrande, if Evergrande falls, many companies with holdings of Evergrande's share will face loss, including the employees of Evergrande. So, that's it for this episode. If you like this video, make sure to subscribe to the channel. Here we upload videos on topics related to finance, tech and history. See you in another video.